If you ignore silver today, you could be leaving millions on the table. This isn't hype. This isn't a rumor floating in some forum. Smart investors have been quietly stacking silver for decades, and now conditions in the US and global markets are aligning to make this precious metal one of the most powerful wealth multipliers available. People are starting to realize what silver can do, but most are still too late to get in at the bottom. Silver isn't just a shiny metal, it's a hedge, a tool, and a store of value. Unlike paper money, which governments can print endlessly, silver is finite. Mines can only produce so much, and demand is surging from multiple directions: industrial applications, renewable energy, electronics, and of course, investors who see it as a safe haven during economic uncertainty. And here's the kicker: the silver market is tiny compared to gold, meaning smaller moves in demand can trigger huge price swings. That's where real fortunes are made. But here's the thing most people overlook: silver doesn't just move when the economy is crashing, it moves when scarcity meets perception. In 2026, the US economy faces inflation pressures, a shaky banking system, and a generation of investors who are waking up to the reality that paper wealth can disappear overnight. Meanwhile, silver is quietly slipping through the cracks, undervalued compared to gold, and historically poised for explosive growth during times of financial uncertainty. Industrial demand is about to ignite. Solar panels, electric vehicles, 5G technology, all of these rely on silver in ways most people never consider. And unlike gold, which is largely hoarded, silver is consumed. Each panel, each circuit, each EV motor eats through silver permanently. Unlike money printed by central banks, once that silver is used, it's gone, driving scarcity and ultimately higher prices. Here's the hook you can't ignore: silver doesn't just grow slowly over decades. When the conditions are right, it can spike in months, sometimes weeks, creating life-changing gains for those who already hold it. Imagine buying at $23 an ounce and watching it double, triple, or more as demand explodes while supply lags behind. Those who bought silver in the 1970s, 2000s, or even during the last financial crisis didn't just make money, they multiplied wealth beyond what paper investments could provide. And there's another factor driving silver higher: US monetary policy. When interest rates are manipulated, inflation rises, and the dollar wavers, silver shines. People look for safety outside the banking system. Unlike real estate or stocks, which can be illiquid or tied to centralized institutions, silver is tangible, portable, and universally recognized. That's why savvy investors call it liquid gold, because when the system shakes, silver moves fast and hard. Now, imagine this scenario: banks restricting withdrawals, currency losing value, stock market swinging wildly. In that moment, silver doesn't just preserve wealth, it multiplies it. People who prepared early have the ability to leverage silver into significant financial power, converting their holdings into opportunities, assets, or even alternative investments that stay ahead of inflation. That's why every major financial crisis sees a spike in silver demand, not just from collectors, but from people who understand its unique properties. Industrial shortages, investor hoarding, and economic instability all converge to create what many call the perfect storm for silver. And history tells us the story repeats. 1979, 1980, and the 2008-2011 cycles all showed that those who held silver before spikes didn't just profit, they gained generational wealth. And today, with global industrial demand hitting record highs and new investors flooding in, the next cycle could dwarf previous ones. Here's another hook: silver isn't just about wealth, it's about financial security, freedom, and independence. In uncertain times, having a tangible asset like silver gives you options. It allows you to hedge against currency devaluation, banking restrictions, and market volatility. Unlike stocks, which can become worthless, or paper wealth, which can evaporate with inflation, silver is universally accepted, portable, and historically reliable. For people looking to diversify, silver is an entry point. You don't need millions to start. Even small positions can grow significantly if the macro environment shifts. And when the market finally catches up to the reality that silver is undervalued, early holders could find themselves in the fortunate position of converting a relatively small investment into a life-changing sum. And here's the final hook. The window of opportunity is limited. While silver has been underpriced for decades, global economic pressures, industrial demand, and investor interest are converging now. Waiting too long could mean buying at a price far higher than today, missing the exponential gains early movers enjoy. Every cycle in silver history has rewarded those who acted early and punished those who hesitated. The question is simple: will you act before millions slip past, or wait until everyone else has already profited? Silver doesn't promise overnight riches, but it does promise a rare combination: scarcity, industrial demand, monetary hedge, and liquidity. Those factors together create explosive potential, and the story is unfolding now. For those paying attention, the next few years could see silver not just rising, but transforming portfolios, lives, and legacies in ways paper money simply cannot. If you understand the timing, if you understand the macro trends, and if you hold when others panic, silver isn't just a metal, it's a pathway to millions. The market is signaling, the industrial world is consuming, and the financial landscape is uncertain. For anyone willing to see it, the opportunity is clear. Silver will deliver those who act early, and history has proven it repeatedly.